Seema, it appears as though for right now, the markets seem to be shaking everything off. What is behind the optimism, given all of the headwinds that could potentially be on the horizon?
Hi, Dom. Yeah, look, clearly the market's really optimistic, and I think there's a few reasons. One is that, it looks like hopefully in the US, the COVID case growth is plateauing, and that should mean that in the months ahead, things should improve. So that's one thing. It takes away one of the growth scares. The other thing is, although the Fed looks like it's set to taper, their balance sheet is still going to be growing, and they've been very, very careful to emphasize that just because they start tapering their purchases, it doesn't mean that rate hikes are immediately on the way. We still think that's a couple of years out. And then off the back of that, we should still have really easy financial conditions, strong growth ahead. And of course, that's always very good for equity markets.
So if that's the case, that's the condition. What exactly are investors looking towards, Seema? Because I know that just from watching the price action over the last, we'll call it 2 or 3 months, it appears as though that kind of tried and true trade over the last decade and a half has now kind of emerged again, and that is just go back into large cap, mega cap technology, go towards Apple, go towards Microsoft, go towards Facebook, those types of companies. Is that again now the trend for the overall markets? Are we away from the COVID recovery trade?
I think it's a really good question, because I think there is still some steam left in that COVID recovery trade. The thing with a lot of these big tech firms, especially your FANGs there, is that they have the really strong balance sheets, positive cash flows. They show time and time again that they have got those strong earnings numbers. So it's not just a cyclical trade, something that performs well when the economy is doing well, but it's something which proves itself time and time again, even when times are tough. So if you have any concerns about the growth outlook, and of course some people do, a lot of those big tech firms are the place to almost hide out. So we are certainly, we have allocations to big tech. We do continue to believe that they will do well.
We continue to kind of see this trend of new highs. It seems like every other day we talk about records in the U.S. market here. But it appears as though the pace of gains is starting to slow. Does that imply that there are other places around the world where a recovery trade could still be in the earlier mid-stage innings, to put a baseball analogy to it?
Yeah, exactly. So what we're seeing is, as you said, so U.S. market growth, or at least expansion, is starting to slow, which is exactly what we'd expect, because U.S. growth is not going to be moving at the same kind of pace that we saw in the beginning of the year. Now it's time to look to other parts of the world where you still have got that reopening trade either underway or about to start. And for us, we think, although emerging markets right now is struggling, in early 2022, when their vaccine pace takes off, they have a full reopening, a lot of more confidence. That's when you could see that big boom in a lot of the emerging markets. Of course, being careful which markets you're investing in, really active management is key for emerging markets. And of course, Europe is still doing well. They're still enjoying some of that shine from the reopening trade.